Hi everyone, it's Sharp out on another video. Today I'm going to be doing a stock analysis on Twilio Inc. Down nearly 60% year to date, which is a ridiculous amount. One of the SaaS companies that's been hit hardest by the current market crash. 75% from its all-time highs, of admittedly quite bloated, around $400 when it was an $80 billion company. Now $18 billion market cap with 50% gross margin, trading single-digit price of sales a lot more reasonable. While the 50% gross margin is not amazing for a SaaS-style company, which is not exactly SaaS in fairness, that is kind of okay, and still this will become a very asset-light business and will become, well, with increasing revenue, and when it becomes profitable, it should be very, very attractive margins. Previous downside was customer concentration. No longer much customer concentration here compared to previous years when Uber was a huge percentage of revenue, and when it lost Uber as a customer at one point, the stock took a massive hit. This is no longer the case, and despite this big loss, it's been an incredible performer over the long term, up 3 times since its IPO, I think in 2018. And at one point it was up many times, over 10x. But again, that was during the inflated market prices. So let's take a look at the stock. For those of you who don't know, Twilio makes APIs for enterprise use mainly, but can be used by very small companies or even individual software developers, and that makes communication with customers easy. That is essentially what all of its products do. You'll most likely have come into contact with Twilio in one form or another as a consumer without knowing it, in the form of automated text or calls from a company, for example, say PayPal when it sends you authentication text, or from a delivery company, or from previously Uber when you would get a text. These are most likely Twilio, and this is the type of thing that Twilio does, and there's a very large market share in this. All of these things are remarkably difficult and time consuming to produce in-house by a software development team for a company like this. A much easier and simpler solution to use something like Twilio. Very valuable to enterprise customers, saves a lot of time for not a lot of monetary value essentially. Of course, Twilio is a key beneficiary of an increasingly digitalized world where we're spending more time on our phone, computers, etc. And you can see that through the revenues. Quarterly revenue in Q1 2020 was $365 million. Quarterly revenue 2 years later, $875 million. These are not small numbers, and to maintain this sort of quarterly revenue growth over the longer term between 40 and 70% is very, very strong. 48% growth in the most recent quarter, which is a little bit of a decrease from the previous year where it did very, very strong. But of course, I'm not going to ding it too much because this is a classic beneficiary of the pandemic, and it's still growing at really, really respectable rates, nearly 50% year over year. Just looking at that quarter's highlights. Revenue, $875 million, as I mentioned, up nearly 50% year over year. Organic revenue, so that's excluding the acquisition of ZipWhip, up 35% year over year. Still very, very strong. First quarter revenue on a dollar-based net retention expansion, 127%. That essentially means that customers on average are spending 27% more on the platform every year, which is very, very strong. They now have more than 268,000 active customer accounts as of March 31st, which is just incredible considering how young this company is, really. Total revenue guidance for the next quarter, 912 to 922 million. Again, slight decrease, or more than slight decrease actually, by about 10%, but 36 to 38% year over year. And organic revenue 27 to 29%. Pretty strong, but the problem is they're still expecting a loss over the short to medium term. I am extremely bullish on Twilio, but perhaps one of the most worrying things is the trend with the dollar-based net expansion, 135% in Q1 2020, and they floated around that number until Q2 2020 or Q3 2021, when it dropped to just above 130%, and now Q4 and Q1 2022, 126 to 127%. Now, this isn't a dramatic loss whatsoever. It just means that those customers, instead of spending 31% extra, they're spending 26 and 27%. Over the long term, this is a bit of a worrying trend, and we can't be seeing this number go much further down. 120% or above is absolutely ideal for this type of company when it's trading at this type of premium, and close to 130% would be fantastic, and that's what I'm expecting from Twilio to return to in the near future. This is what I mentioned earlier on previously, particularly in the case of Uber. When they lost Uber, it was a big hit to the company. They had a problem with customer concentration, and they highlight this in the reports now. Q1 2020, 15% of the revenue was from the top 10 customer accounts. Now in Q1 2021, 2 years later, that's only 11%. That might not seem like an enormous drop, but that it really is, and shows that shows that not only are they creating a lot more revenue, but they're getting a lot more customers. 268,000 customers now The top 10 accounts for 11% of that revenue, but it's becoming a lot more widespread, a lot more diversified, and crucially a lot safer. Losing one of those top customers will not be the end of the world. It will be a perhaps 1 or 2% hit to the overall revenue, which, while significant, is not the end of the world and will protect this stock going forward and the business. The CEO's note at the end said a lot about the direction of this company and why one of the reasons I'm so bullish on it. Jeff Lawson, the co-founder and CEO, is a very admired CEO with a lot of skin in the game in this company. He owns a decent chunk of it, and it's a lot of his personal wealth, which of course you love to see. You want management to be in it together with you. Previously the first product manager, Amazon Web Services, he's been around the cloud game for a long time. He knows a thing or two about this business, and I'm very confident in his ability to lead Twilio going forward. Obviously management is a huge deal with a company like this. Basically, he just reaffirmed that he was very happy with the revenue results, pretty strong, continuing to execute on the long-term strategy. Top line growth isn't everything, but what they believe is and he remains confident that they will deliver 30% annual revenue growth through 2024, so essentially guaranteeing 2 years of 30% revenue growth, or at least putting out there that that's the minimum they want. They're only going to get dinged from that from the future and stung if they don't achieve that, so it seems pretty strange that you would do that without being fairly confident. And beginning with full year 2023 results, the goal is to deliver annual non-GAAP operating profitability consistently going forward. This is a major problem I have with the business. I have with any business like this. It doesn't seem like I had a clear direction to profitability. That has now changed. They've accelerated the timelines and they're going for non-GAAP operating profitability consistently and soon. They're aiming for 20% non-GAAP operating margin, which, while not spectacular, will be pretty good, and I'm hoping those gross margins and operating margins will come up over time as the business matures. But this is just excellent to see, really reaffirms my bullishness on this stock. Right now, this business isn't consistently profitable, so a lot of these metrics are pretty meaningless. What is meaningful is the price-sales ratio of 5.86 as we stand today. Extremely strong for Twilio's history. This is lower than pre-pandemic levels. In early 2020, this stock was trading for about where it is today, around $90. There's not much to say here, really. Enterprise value to 4.72. It's hard to value companies like this. All we can say is compare it to others in this class and compare it to itself. And against others in this class, this is a very, very, very strong SaaS offering, in my opinion. And compared to itself, it is the cheapest it's been for a long, long time, since basically 2019, 2020 levels, and this business is a lot stronger then. It has an enormous TAM. It's really hard to get numbers, so I've been looking for numbers on this, but essentially any app that sends you a text or a video and communicates with you in some way that is automated, Twilio can be responsible for that, or is responsible for that. That is an enormous opportunity. They're growing at 30% a year organically, and they're continuing to do this, or they're promising to continue to do this for the near future. They expect to, and they expect to be GAAP profitable by 2023 on a consistent basis going forward, with hopefully 20% operating margins, which is their target. I think this could make this a tremendously attractive company going forward. That's even if they don't continue to improve their gross margin, which I'm expecting to eventually come up to close to normal SaaS companies range, maybe 60-70% on the lower end. They've previously had a 60% gross margin, but they've been spending a lot to try and grow aggressively. I would like that gross margin to come back up. But overall, very bullish on this stock. I've just added a very, very small position, not even a full percent yet, and I'm going to dip in over the next few weeks. So I don't think we're at the market bottom yet, but I'll be very happy to dollar cost average into this company at the current prices, maybe between price sales ratio up to 8 or something like that. But I'm very, very bullish on this business. I think it has a long runway for growth. I think its profitability is not that far away, and I think it will be very profitable in maybe 5 years or so. I think it'll be an excellent stock to hold over the longer term. Of course, I'm not a financial advisor. You should do your own research and due diligence, and none of this is direct financial advice. If you want that, you should speak to a financial advisor. If you're enjoying the videos, please like and subscribe. Tell me what you think of Twilio. Tell me if you think it's rubbish. Tell me if you own the stock, if you're short the stock, long the stock, whatever. Comment down below and tell me what you think. I'll see you again next time.